Uh, Personal asking. Chipmunk Financials. How do you rate dividend investment opposed to growth investment? So for me, it's not really a straight line like that. For most dividend companies, they tend to be more mature companies that are, they reach a certain point in the business where they can start to pay out more cash. But most times they don't grow as fast. But that's not for every company, because you have some companies that are paying dividend and they're going at a fast rate. So when I did my video last year on the dividend stocks, Barita was one of the companies that was on my list. But Barita was also one of the fastest growing companies. But this Barita was an exception. So in general, growth companies tend to don't pay dividends. So if we're going to look at the US market, and we're going to look at companies like Meta, Google, Amazon, those companies tend to don't pay a dividend because they're reinvesting back the capital back into the business. But if you look at a Coca-Cola now, or a Procter, or another blue chip company, they tend to pay dividend because they reach at a mature stage. So if you want to get dividend companies, you have to look more for mature companies. So what do you guys, all you guys agree, or you have a point you can add on this?
All right, I'm my piece. Dividend investment, I really believe in that still. Number one, when I look at the local market, seeing local market split into two markets, you have the junior market, the main market. Well, if the main market companies are mature companies, pay a dividend, I don't have a problem with that. But with a junior market company paying dividend, I think that's a problem. I think them just a waste money. See, I'm going to explain why I say that. That's why I said, company that needs to grow, need to harness their resources and grow the business. One of the problem is when you pay the dividends, seeing dividends coming to us as shareholders, government take a slice of the cake, I think the government takes some 15% of dividends.
Yeah, they take.
Seeing, and one of the things why most companies invest on the Jamaica, on the junior market, that is,
they want to grow.
Is to avoid the taxes.
Yeah. Well,
so why now you invest to avoid taxes and turn around?
I give
you get me? A subject us to taxes again. So what would I say? And it's a very easy way, Keep the money, grow the business, make the capital, give us capital gain then. So when the stock price go up, who want to take dividends, sell whatever portion that is equal to the dividends where you want and take out your money. And in that way, you're not paying no tax again too, because capital gain is not taxed on the local market. So pay us in terms of capital gain. Who want to take dividends, take dividends. I mean, take the capital gain without having to be subjected to the taxes. And everybody good.
I'm missing something too.
Answer Ron. Answer first.
I have some man on the stock market where when you see them offer dividend on the junior market, you have to be very skeptical because dividend stock in Jamaica is a very direct correlation between dividend and stock price rise. When you hear success and give a dividend, stock price rise. I have some manager, some senior manager who run a company, most of the share with them having at the company in our offshore holding company. So that capital gains are for them benefit. So is it, as what Onila said, is it actually beneficial to return the capital to investors or compounded like how Amazon has compounded as well with retained earnings? And you have to answer that question for yourself. It's subjective.